Hey everyone, welcome back to Corporate Decoder. IPFX just filed an 8K announcing the separate trading of its shares and warrants, and this filing gives us a look at how SPACs structure their offerings. Quick note, this is not financial advice, just my take on public filings for educational purposes. We are seeing the beginning of the end for units as a trading vehicle for this SPAC, and this is where things get interesting for investors. So what is happening here is that Inflection Acquisition Corp, VI also known as IPFX, is making an announcement. They are letting everyone know that starting around May 18th, 2026, investors will be able to buy and sell the company's shares and warrants separately. Right now, they are bundled together as units. This company is a special kind of company called a SPAC, or a Special Purpose Acquisition Company. Think of it as a shell company that goes public with the sole purpose of buying another company. Investors put their money into the SPAC, hoping it will find a good company to merge with, thereby taking that other company public. This section here tells us what is being traded on the stock market. We have the units that are made up of one Class A ordinary share and 1/3 of a warrant. Then we have the Class A ordinary shares themselves. And finally, the warrants. Each of these can now be traded separately on the Nasdaq stock market, LLC. The trading symbols are IPFXU for the units, IPFX for the shares, and IPXW for the warrants. The key detail here is that holders of the company's units can choose to trade the Class A ordinary shares and warrants separately. So if you owned units, you could now decide to just hold the shares or just hold the warrants. This usually happens when the SPAC is on the verge of a merger or has identified a target for this company. The unit holders make the call to start trading them separately, which is a common step for SPACs. An important detail is that they will not issue fractional warrants. So if you have a unit that entitles you to 1/3 of a warrant and you want to separate it, you will only get whole warrants. This means if you don't have enough units to form a whole warrant, you might forfeit that fraction. And as usual with these filings, they attach press releases as exhibits. Exhibit 99.1 is the press release detailing this announcement, meaning the information we just discussed is officially out there for the public to see. There is also a cover page interactive data file, which is basically a digital tag for the entire filing. This report is signed by Kevin Shannon, the Chief Executive Officer. This tells us that the leadership of Inflection Acquisition Corp, VI, is aware of and endorsing this filing. Now, looking at the broader picture for SPACs, this separate trading of units often signals that the SPAC is moving towards its intended purpose of finding and merging with a target company within a set timeframe, typically 2 years. If they fail to do so, the funds raised are usually returned to investors. This move can sometimes precede a significant announcement about a merger or acquisition. The fact that they are allowing separate trading indicates they are either close to a deal or feel confident in the market's ability to value the individual components of the unit. It is a common and expected step in the SPAC lifecycle, but it's always worth watching what comes next, as the subsequent merger or acquisition is what truly defines the long-term prospects of the company and its shareholders. The risk for investors in any SPAC is that the eventual acquisition may not be a good fit for their investment goals, or that the target company may not perform as expected post-merger. We will be watching closely to see what IPFX does next. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this useful, please like, subscribe, and join our Discord community in the description.